2 years, not 2 months. The visible progress you're hoping for usually comes slower than you'd like. Even with consistent effort, it can take a long time before progress feels significant. It might be a year of writing and editing before your book really starts to come together. You may need 2 years of recovery from a major injury before you notice just how far you've come. It may take 2 years of yoga before you realize how flexible you've become. Take a deep breath, stop worrying about immediate results, and settle into a nice routine. So that kind of fits right in with what we're going to talk a little bit about today. We're going to talk, as we always do with Adam Lee and Jake Weatherford, we're going to talk through some financial planning, some investment management topics. Really today's more focused on investment management and portfolio management, if you will. So we're going to dive right in. But I just liked that quote of, hey, sometimes let's focus less on the immediate results. Let's focus on the long term. And when we're diving into things like world market capitalization, portfolio creation, that's, as we like to say, that's kind of our superpower, is our long time horizon.
Absolutely.
So today we're going to really get into world market cap, world market capitalization. What does that mean? We'll dive into that, and we'll dive into kind of what that looks like and how it represents itself around the world. So, Adam, why don't you just start with basically what does world market cap mean, and why is that a good thing to know? Why is that a good place to start with your investment philosophy?
Absolutely. So market cap. Everybody knows what world means, right? It's all the countries in the world. Market cap is just a fancy word for how big something is. So, the market cap of Apple is a lot bigger than the market cap of, OG&E, the local utility company that's also publicly traded. So market cap is just shorthand for what is the total value of the company. And so we talk about world market cap, we're talking about the total value of all the different companies in the world. And, in theory, there's different types of companies even than we're talking about. There's publicly traded companies, which is, the primary driver of the portfolios we recommend to clients. But there's also private companies out there, right? There's insurance companies that are private, banks that are private. In some foreign countries, there's state-owned companies as well. Like Saudi Arabia owns their state oil company, Russia owns their state oil company, things like that. And so there's sort of this full universe of all the companies in the world. But typically, when we're talking about global market cap, we're talking about the public companies or the companies that someone like you or me could actually go invest in.
Mm-hmm. So world market cap, world market capitalization, that is obviously separate from the economy, right? So I think that's one thing that we'll say, or just maybe in general can be misinterpreted, is like, well, I keep hearing about how big China's economy is. Well, their stock market is not really comparable to something like the United States. So dive into that just a little bit further about what's the difference between world market capitalization and the economy of a country?
Yeah, that's a good question. Some of it comes down to sort of what I mentioned. That's probably the most explicit way, is like, not all economies have a primarily capital driven economy with individual ownership. Like a lot of the entities in China are like state-owned entities, like state-owned banks and things like that. Russia owns their own oil production. Same with Saudi Arabia has some public shares in their oil production, but most of it's state-owned. So that's part of it, right? Is even if the economy moved one for one with the market, which it doesn't, and I'll get into, even if that was the case, in a lot of foreign countries, there's a lot of government ownership of firms that takes that out of what's available. And China's a good example of that. But even that, if you think of kind of the economy and economic growth as like a river, you could think of the stocks as like a boat in that river. And like generally it's going to follow the tide, right? And it's going to take a lot of effort to move against the tide. But at any given point, the boat is not going to always be moving equally as fast as the tide, but in general, it's probably going to end up in the general direction. And so, if economic growth went to zero for the next 100 years, like, would that say something about how stocks will perform? Of course, yeah. Like, it'd be difficult for stocks to continue to grow if economic growth, plummeted and stayed low for an extremely long period of time. But stocks are sort of it's all different types of things happening in stocks that causes their value to go up and down against the backdrop of economic growth, which has been really persistent for a really long time, sometimes higher in some countries, sometimes lower. Sometimes we have recessions in the U.S. But I mean, if you just think about the economy, the primary mode of the economy is growth. And you can think of it in terms of like, my car has a backup camera, and it's not like the fanciest car in the world, but getting a car with a backup camera 30 years ago, I don't know if you even could. Sure. And so there's little things like that we take for granted, but there's constant growth. So much so that it is seen as like a 5-alarm emergency when we have a couple quarters where there isn't growth.
Sure.
And we call it a recession. They're pretty rare, and they're usually relatively short-lived.
That's good. That's a good way to frame it. Last thing I'll say on world market cap, and kind of going back to the China example, I often get a pretty shocked look from clients or friends when I tell them the data I think I looked at was in 2021. You may have more up to date. But in 2021, the market cap of the United States was about 60% of the globe, and China was 4. People aren't so shocked that the U.S. was 60 in 21, but everyone seems to be shocked about the 4, and it is a very good point that a lot of that is state-owned. So.
Yeah, absolutely. And just think about, like, where would you rather start a business? Of, like, you know, where do you feel more comfortable that you're going to be able to have legal certainty in the business and, like, you know the rules and all that kind of stuff. It's pretty hard for foreign companies to start businesses in China. And so when you think about what's the value of a share of China's economy, well, to some extent, it's like whatever the government there says it is. And so you're not going to be willing to pay as much for those type of companies. To get back to your earlier point, though, one last point I want to put on it, though, is the part of the reason world market cap is important is because when we're thinking about how we're going to invest money, our starting point should be everything. And obviously, we don't just necessarily go out and invest pro rata in every single company in the world, but that is our starting point. And then we have to prove to ourselves, okay, why should we exclude certain securities from the portfolio? Why should we overweight certain ones over the others? But our starting point isn't, hey, we're going to start with a bunch of cash and then individually pick the companies we like. We're going to start with everything in the world, and then we're going to start to exclude things or under or overweight them based on how much we like them relative to other things in the world.
And if you do exclude something, you have to have a good reason why.
Absolutely.
So to start with anything less than that is a poor decision because you've already made a decision by doing that. So to start, and we're going to get into emerging markets, international, we're going to start there because we're going to put U.S. last. Because typically what a lot of individual investors do that may be watching these videos is they start with not just the U.S., but not just the U.S. stock market, but 500 of those companies or less than that. And there needs to be a really very good reason to do that if that's going to be your decision. And so we're going to get into that more. We'll dive into emerging and international next, and then the third part of our series will be U.S. Anything else to say on world market cap before we move on?
I think that's great.
All right, thanks a lot. If you want to dive in further to emerging markets and international, you'll be able to watch our video. It should be coming out here in about a month, and then U.S. will come out about a month after that. So thanks for watching.